Smaller banks and lenders in the S&P 500 have lost more than 20% since peaking back in May. Meantime, you've got those home builders. They've also tumbled more than 25% from their May peak. So, are these declines a sign that the S&P rally is about to fizzle? Joining us now with more on this story is our own Lynn Thomason. So, Lynn, talk to me about kind of how these relationships kind of all work together.
I think it's been interesting because home builders and banks have been sort of the epicenter of the whole financial crisis.
Right.
So to see them fall apart in the last month has been especially interesting, you know, in the face of the market rally. So it does kind of bring to question whether the market rally can last.
And while we've seen some tremendous gains in financials overall, you're talking specifically about those regional bank players.
Right, and it's interesting, one fund manager was mentioning to me that, you know, if you look at these regional banks, they're more connected to the economy, they're more, they don't have the international growth, they don't have the capital markets business that a lot of the larger sort of investment banks do. So in a sense, these could be better indicators than some of the bigger players out there.
And they are literally, pillars of the community. They are entrenched in where they're at. If you see one of these banks go down, it causes a ripple effect in the community.
Exactly.
Talk to us then about some of the other indicators that you're seeing according to Bloomberg data. What have you been seeing?
I mean, really, markets rallied across the board overall since March. What's interesting, though, you know, we hear a lot about, you know, this is the biggest quarterly rally since 1998. Yeah. But the market has stalled out since June. It was actually down about maybe 0.4% since June. So it really hasn't done anything in the last month. So I think a lot of investors are saying, where is it going to go from here?
Well, I think about those home builder stocks. We've been talking an awful lot about the rise in mortgage rates. So while they did see a bounce and now they've stalled again, I mean, people are worried about this rise in mortgage rates and what impact it's going to have on the home builders. As you say, so kind of crucial to kind of getting things back on track.
Yeah, and that's kind of the connector between home builders and banks, is they're both affected by mortgage rates, and that could be kind of the catalyst behind all this.
Can we throw on top of that Dow theory, where you look at transportation stocks as well?
Right, and that's kind of, you know, bringing it back to the economy. These are all sectors that are really closely tied to the economy, and so some people look at transportation stocks as, you know, a real sign as to whether business is increasing or decreasing.
I thought it was interesting in your story, too, that you talked about, our folks were saying, you know, this has really been a government-induced rally. So I guess some could draw conclusions that, well, maybe then it isn't a real rally to some extent.
That's true, too. You've had, you know, a lot of these banks have been so so much government funding, so much, you know, effort into saving these companies. So, you know, it kind of draws to question whether this government stimulus is actually working or not.
Lynn, going forward, are a lot of the folks you talk to, are they upbeat about the coming quarters?
I think people don't know. You hear a lot of wait and see. We're just going to see how earnings season plays out, kind of let it come, and then we'll figure things out from there.
Not a lot of green shoots talk?
Depends on the day.
Yeah.
So bottom line, in terms of what you're seeing, the declines in those regional banks, the home builders, Dow theory, transportation stocks, it kind of says to the folks you've been talking to that we may be done here?
Right, exactly.
All right. We're going to leave it there. Hey, Lynn, thank you so much.
Thank you.
Bloomberg News' Lynn Thomason.